Well, good morning, and thank you very much for coming to Urbana Corporation's annual general meeting. I always like the way they start these. Will the meeting please come to order? It's like you're in a high school. Would you come to order, please? Or behave yourselves. Anyway, I'm Tom Caldwell. I'm President and CEO of Urbana Corporation. I want to welcome you to the meeting. With us today are our current directors. That sounds a little about to be replaced, doesn't it? The current directors. Possibly you could just stand. Beth Cawley. George Elliott. You don't need to applaud for George. Michael Gundy. Charlie Pennick. And Sylvia Stinson, our Chief Financial Officer, and our General Counsel and Corporate Secretary, Harry Liu. I'm going to preside over the meeting, and Harry Liu will act as Secretary of the meeting. I shall ask Humza Yaqub and Laurie Grinton, representatives of TSX Trust, the Register and Transfer Agent of the Corporation, to act as scrutineers. The Secretary has confirmed that the meeting materials were mailed to shareholders in accordance with all applicable laws on May the 8th, 2025, and I direct a copy of the declaration of the mailing be attached to the schedule to the minutes of this meeting. Prior to this meeting, the scrutineer reported on the common shares present and the number of proxies received in common shares. I will call upon the Secretary to read the report. Sure.
I have read the scrutineer's report on attendance, which states that there are a total of 23 shareholders present in person or by proxy, holding 6,458,000 common shares. This meets the quorum requirements of the corporation for the purposes of this meeting.
Thank you, Harry. Well, I declare, with the notice having been properly given and the requisite quorum of shareholders being present, the meeting is properly constituted for the transaction of business. For each of the resolutions that follow, only the shareholders of common shares will be entitled to vote. All the votes at this meeting will be taken by a show of hands. I can report that prior to the meeting, sufficient proxies were voted in favor of each of the matters to be voted on at this meeting. Therefore, each of the items set forth in the notice of meeting will be approved at this meeting. The first item on the agenda is the approval of the minutes of the last shareholder meeting held on June the 12th, 2024. These minutes are available for inspection by shareholders. Unless there's any objection, I do not propose to have the minutes read. I will entertain a motion to approve the minutes.
I'm Brendan Caldwell, and I'm a shareholder. I move that the minutes of the shareholders meeting held on June 12th, 2024 be approved.
Thank you very much. And could I have a seconder, please? Pick someone with a microphone.
Doesn't need to be just a second.
Okay. All in favor, please signify by your raising your right hand. Contrary, if any. Thank you. The next item of business is to place before this meeting the financial statements of the corporation for the year ended December 31st, 2024. These financial statements, together with the report of the auditor dated March the 21st, 25, have been duly made available to all shareholders of the corporation. Are there any questions on the financial report, on the financial statements? Thank you. Answer any questions. I've done that. Just the way we do conduct these meetings, just for the record, we try to get rid of the formal, the legal part, deal with this first, and then what we do after that is try to open it up to discussion and questions and also some of our underlying shareholder investee companies speaking about them. The next item of business is the election of directors. I declare the meeting open for nomination for the election of directors for the ensuing year or until their successors are elected or appointed. Could I have nominations, please?
I nominate Thomas S. Caldwell, Beth Cawley, George D. Elliott, Michael B.C. Gundy, and Charles A.V. Pennick individually and not as a slate for election as directors of the corporation.
Are there any further nominations? Okay, I declare the nominations closed. May I have a motion to elect those nominated as directors of the corporation?
I move that each of the persons who have been nominated be elected director of the corporation for the ensuing year or until his or her successor is elected or appointed.
Thank you very much. A second, please.
I second the motion.
All in favor? Contrary? Carried. I declare each of those nominated to have been elected as director of the corporation for the ensuing year or until his or her successor is elected or appointed. The next item is the appointment of auditors. May I now have a motion to appoint Deloitte LLP as auditor of the corporation?
I move that Deloitte LLP be hereby appointed auditor of the corporation to hold office until the close of the next annual meeting of shareholders or until its successor is appointed at such remuneration as may be fixed by the directors, and the directors are authorized to fix such remuneration.
Thank you very much. Second, please. Harry Liu, all in favor? Carried. So motion's carried unanimously. I will speak about the corporation's operations after the formal part of this meeting and will address some of the questions we received from shareholders. At this point, is there any further business to be brought toward this meeting? If there's no further business, I will entertain a motion to conclude the meeting.
I move the meeting be terminated.
Thank you. Second, please. Angela Sturpey, all in favor? Carried. Mr. Caldwell leaves the podium. I just figured you'd want to know.
And I'm here to read the forward-looking statements. The following presentation may contain certain forward-looking statements within the meaning of the Ontario Securities Act and comparable legislation in other provinces. These forward-looking statements may involve known and unknown risks, uncertainties, and other factors which may cause the actual results or events to differ materially from those expressed, implied, or anticipated in such forward-looking statements. Unless required by applicable securities law, Urbana does not assume any obligation to update these forward-looking statements. This concludes the formal part of the meeting. In a moment, Mr. Caldwell will speak about the corporation's operations. But before we proceed, I'd like to draw your attention to the legal disclaimer about forward-looking statements.
For novices to these annual meetings, what that means is no one's responsible for anything. Or, as they say, govern yourself accordingly. Well, let's put it this way. As we said in the annual report, and to paraphrase Frank Sinatra, it was a very good year. Our net asset value per share was up 27.4%. Our A share price, which is really the trader, is up 33.3%. Really, in the public component of our investment portfolio, and remember, we try to balance about half and half, public and private. A heavy skew toward the U.S. financials, big U.S. financials, the Morgan Stanleys, Coburg Kravis, Bank of America, Citicorp, that sort of thing. And in Canada, the energy sector. Energy, we typically stayed in mid-energy companies, things like Whitecap, Tamarack, oil and gas, that sort of thing. And they've generally performed well for us. And I'm talking about the calendar year ending 24, what I call PT, pre-Trump. In the private sector, we had some write-downs, Highview Corporation, Financial Corporation, wrestling with some issues, Radar Capital, and Cognitive Corporation. In the private equity area, you know, it is particularly the earlier on in an investment, your risk level is quite high. And you're going to get some right, and you're going to get some that sort of stumble along for a while, and you're going to get some that just don't work out. And on balance, I was joking the other day, I said, that, you know, you can be right and wrong as long as you're right in bigger numbers. And we seem to have been able to do that. They were all connected with one investment. One of them spun off from this thing, Radar, we went into years ago, that did not work out. And a lot of it is representing the cleanup of that. However, that having been said, we've had some tremendous wins in the private equity area, and not only in the public sector, but the private. Evolve ETFs has grown tremendously. It's been a great company, really smart management, and we're very pleased to be involved in that. Lyceum Health, which is a whole new way of dealing with healthcare in the United States, particularly high-end, really expensive drugs. This is an incredible business. The Canadian Securities Exchange, been worked out. Tetra Trust, and both we're going to hear from both the Canadian Securities Exchange and Tetra Trust. Our big winner that we realized on last year, now remember, all the profit wasn't booked into last year, but it was accumulated over a period of time, was IGPC, Independent Grain Producers Co-op. And there was a co-op. And what it was almost like replay what we did of the New York Stock Exchange. We were buying not-for-profit co-ops, and we've discovered that if you take a not-for-profit company and you turn it into a for-profit company, it generally works out well. They start to show profits. And just to give you an idea, we invested $7.5 million in that company, and we sold the position for $73.1 million, just under 10-time multiple on that investment last year. So some of them, you want your good investments to outclass the ones you miss on, and that's the nature of private equity. Because you're, in great measure, you're betting on people, their commitment, their integrity, their skills, and a lot of it is, much of this, as I tell our young people, it's not analysis of numbers, it's sizing up people. And we have some wonderful people that we have invested with, and we are very supportive to the companies that we get involved in. So there it is, $73 million from a $7 million investment. That's like an okay. And we've got a couple of those on the books. A lot of our thinking is kind of out-of-the-box thinking. The beauty with Urbana is we can do anything. I was laughing when we put the company together. I said, I want this charter to be so broad that we can declare war. I want to be able to do anything in this company, and we can. We can explore ideas. We were also in the mineral program. You know, we've had our mineral property. That was the genesis of urban Quebec mines in Urban Township, Quebec. We had 6 claims there, really good high-grade values on the properties. We expanded it to 74 claims, which has now been reclassified as 44 super claims. So we have a big land span there, several thousand acres. And gold, by the way, gold deposits tend to be like a pencil. They plunge deep, very little on the surface, but the pencil can get broken and twisted off. And the group next to us, Cisco, spent over $1 billion in the properties surrounding us in exploration, and they just sold their holdings to Goldfields, and it's a South African company. What we're finding there is Urban Township is very erratic. You can find really good gold values, very thin values, and then nothing. And so what that's showing is gold is all over the place, and what that's telling you is it's down deep. Cisco did one hole, I don't know, several thousand meters deep. You know, that's South African deep. Those are $1.5 million holes. So we're not going to necessarily be doing that. Our drilling, the winter program, if you take a look at the property, this is the north part. This is where the rock is close to the surface, and then it plunges, and then there's swamp over this. So the only place you can drill the only time you can drill is in the winter. So we punched some holes down there, and we got good results. You love geologists, by the way. Geologists are always optimistic. Looking good, very promising. You know, needs more work. You know, I think they have a dictionary for geologists to keep you spending more money. But we did get some results that we think are fairly attractive. And then in the summer, we're going to drill the northern part where there's very little overburden. Actually, there's a lot of outcropping and rock, so it's a lot cheaper. We spent a little bit over $1 million on the southern drilling. We'll probably spend maybe around $500,000 on the northern drilling. We want to get a picture of the thing. We do not want to be in the mining business. What we're trying to do is to enhance the property to do a deal on the property. Our goal, I just see this as an investment holding for Urbana. If we can sell it to Goldfields. Now, so Goldfields owns all the property around us. It's like all the apartment buildings and the little bungalow in the center. We're the little bungalow in the center. But sooner or later, we have good values. They're going to come to us. We're going to do a deal. It could be a year, it could be 3 years. But we've held this property since 1947. So we're what we call patient investors. But I'm going to stay around until we see something there. So that's basically you know, what we have done. We did about $1 million, $1.5 million in terms of exploration there. We like I love the prospector report. Exciting, significant findings, looking good. You know, anyway, that's my, I hope our geologist doesn't see this, but at any rate, we got a really good team working on it, and we're going to keep working our way through this. So it was a good year. Then along came Trump. And it was the first group that got hit the worst were the U.S. financials, which is surprising. You'd think they would benefit from it, but they got smacked the worst. What was interesting is the Canadian energy stocks held up. I guess mercurial would be the word that would describe the world that we now live in. What is interesting to me is you watch all these apologists on television saying, well, you know, he's got a plan. What the plan is. There is no plan. The plan varies every morning. We're dealing, I'm sorry? Yeah. Yes, thank you. At any rate, my point here is that you're dealing with kind of crazy, really. And, you know, it's like, listen, all of us grew up in dysfunctional families, right? So whenever there's one wacko in your family, you know, you're drunk on Uncle Harry, everybody gets sucked into the party. That's just the way life is. And it's the same with leaders and the same with countries. You know, he's off the wall. Maybe there is a big plan. I don't think there is, but I love these apologists saying, no, there's a plan here. We want to take over Canada because we need the Arctic. We don't want China shipping goods to Europe through the Arctic and saving 2 weeks of shipping, and we're going to block them at the Panama Canal. This is like 1850, you know, mercantilist thinking. It's just, but it changes each day. I was laughing the other day, you know, we have this new fighter coming on. Boeing was a classic example. He's beefing up Boeing. Boeing is going to make this new fighter, the F-47, 47 because he's the 47th president. The beauty of that fighter is it takes off in all directions at the same time. But what is happening here? He's dismantling world trade, defense, and financial systems. And so you got to manage against a background of uncertainty. But, you know, I always keep saying, and I know this sounds evangelical here, but the best business book, period, is the Bible, and there's a great line in there, this too shall pass. He will pass. We'll go beyond him at some point in time. You've got to look beyond him. And I kind of think his power base will be a little bit weakened as we get toward the midterms anyway, or even before the midterms. People are starting to, this is a little bit off the wall here. We will revert to a norm. What that norm looks like, I don't know. It may not be as easy as we go forward. But he does deals. You know, he's done a deal with the UK. Everybody, they're happy with that. He's obviously going to deal with China because he has to deal with China. But it's eventually we're going to revert back to something more normal. But right now he's got a free pass in the States because everybody's afraid of him. If you're a Republican and you oppose him, they'll put someone in your primary, and you're not going to get elected to the Senate. So he's got sort of free reign for now, but I think that's going to decline. So what this meant for us is we had about 2.4% net asset decline per share, net asset per share, in the first part of the year, right up until May. For example, if we look at May 31st, from our inception point, we're still at about 15.11% annually compounded for the last 23 years, annually compounded after tax. Nobody's close. Not Buffett, nobody. And that's sort of worked out. Since the declines, like for example, Urbana's A shares were $5.78 at year end. They dipped to $5.05 early April. That was about the worst of this thing that we went through. And now the stock is at $6.30 for about a 25% bounce in our share price since then. So far, we're still up on the year. What is interesting, people say, well, you know, the markets are strong. Why is the market strong when we got, you know, crazy at the helm? I think what it is people are trying to protect themselves. Remember, stock markets are a vote. They're people voting with their money. It's not like someone casting a ballot. It's not when someone giving an opinion. It's someone giving their opinion with money. And usually they've given some thought to that. Not always, but sometimes they've given some thought to it. So I think what is happening is people investors are saying, we don't know where this is going, but if I can buy or own good companies That's going to be my protection of my assets going forward. Because remember, inflation is always going to be the name of the game. No matter what, it's always going to be inflation. And you look at anybody who owns a house in Toronto, you're a millionaire now. You did nothing but just live in the place. You know, so my point is inflation. So people are protecting themselves against inflation and indeed a certain degree of craziness by voting for companies, large companies that have dividends and have growth prospects. So everybody gets so creative in this stuff. You don't get overly creative. Just go for what the market is actually telling you. In Canada, we got a new government. Let me put it this way. It's got to be better than what we've had in the last 10 years, right? I know that's a low bar. But it has to be better. We've had 10 years of policy totally focused on carbon emissions to the exclusion of absolutely everything else. In fact, it's been an anti-growth, anti-innovation, anti-jobs environment. And hopefully that's going to change. Mr. Carney, as Davy Crockett said, he's good at speechifying. I want to see what he's going to do in terms of what is real. But it's positive anyway. Now, what they're talking about, our government's talking about is, well, we got to build pipelines and infrastructure and LNG and mining. Well, those are all great, but they don't create jobs. They're good in terms of creating exports, but, you know, that is not a big job generator. So it looks like the LNG plant. We've been talking about that liquefied natural gas plant in British Columbia for most of the time I've been in the investment industry, certainly 35 years of it. And we still don't have a one, which we're starting to generate. There's 10 to 15 plants in the Gulf Coast with another 10 on the drawing boards. I mean, we've been scooped. That's over. Timing is everything. But at any rate, if you want to create jobs, our guys have to think in a bigger picture. We have to reduce and simplify our taxes. We have to reduce and simplify our regulations. We got a country that we can build here. My point here is if Carney, Prime Minister Carney, gets this halfway right. Now, remember, behind him, it's the same old crew that was supporting Trudeau. But that notwithstanding, if we get it halfway right, Canada would be the destination for investment. This could be really good for Canada in terms of where this country is going to go. So I'm quite positive about it. I'm quite positive about Canada. And as I say, the world of politics, nothing gets totally solved. It's a world of 50% solutions. Everything gets halfway done. But if we get this halfway right, Canada is going to be the investment destination, period. Our natural trading partners become China, possibly even Europe. We got tremendous resources, natural resources, tremendous people resources in this country. And the immigrant community, well educated, and they want to build this country. So we got lots going for us. So particularly for you young people, it's easy to get pessimistic. There's no jobs or anything that you would like now for young people, but there's some real possibilities here, and Urbana is going to be here participating in them. That's my report. Now, I have some questions from shareholders. I'll do the mailed-in ones first, and then I'll open the floor to some questions. Then we're going to have a presentation by the Canadian Securities Exchange and Tetra Trust. Question one is, I don't even understand the question, but I'll read it. Would the Urbana be adverse to having the CSE, once it's taken over the NSE, that is the National Stock Exchange in Australia, by regulators, to use their public listings as a means for the CSE to go public in Australia and eventually do a list in Canada? Well, first off, that's a question for the CSE board, not for us. The CSE is the strong member. We're going to this investment on Australia, and I'm sure Marianne, who's our chief financial, going to speak to that, or may speak to that. But you want to go public in the area that you really do your real business in. And this is Canada, and the Canadian Securities Exchange is the business. So if, as, and when they were ever to go public, which that's a decision that's up to them, they would probably be in Canada. Here's an interesting question. Would we consider reducing our management fee until such time as the discount between the share price and the asset value is narrowed? Well, let me put it this way. Number one, if you invest in a company where they're watching the stock price, sell the company. I mean, that's what Jack Welch did at General Electric, fudging the books. They were watching the stock price. Chainsaw Al, a guy in the States who was an efficiency expert. The point here is the job of management is to build the company, not to watch the stock price. The stock price will take care of itself. We have a fantastic public relations program. We do the best we can. We've bought back stock. The discount is the discount. The point is, we're just telling people I sold someone, I can get rid of the discount instantaneously. I'll just stop publishing it, publishing the asset value. It's the share price that you're owning. And it may be at some point in time it trades at a premium. It may always be at a discount. But my job, our team's job, is to build the company. And let me just talk about the management, the management fee. I think this gentleman misses one point. We are not passive managers. We are value creators. Value creators. Now, let's go back to see the independent grain producers. Here's a co-op company we put $7.5 million in some years ago. The team at Caldwell Securities, Sally Haldenby Haba, and Caldwell Investment Management, Brendan Caldwell, they established, I didn't, I just took the ride, went off for the ride, a trading environment for the members of that co-op so they could buy and sell units of their co-op among themselves. We set up an exchange for them, and that allowed the company to see, to recognize and realize the value if they wanted to sell in between. And a lot of them were farmers, et cetera, selling corn to the co-op. So they could buy and sell things. And that created the value. That mechanism took us years of hard work. Nobody paid us for that, years of doing that. And that enabled this company to then be sold with a $76 million payday. That was not being a passive manager, just sitting at my quote machine. I'm lazy. I'd like to be doing that. But I can't sit there and just trade. We go in and we create value. And whether it be assisting the CSE to realize its potential, and hopefully, Tetra Trust as well. So we're not passive. And poor Charlie, I hate to start, one of our directors, Charlie and Beth, sit on the board of one of the companies we have a challenge with. And hours and hours and hours, and put in 8 more hours that they've spent trying to make this company work. We're not passive investors. We get involved. We'll help them. We'll encourage them. We'll do anything we can to help them, putting in more money, and we've always been good partners on that basis. But it takes time to do it. The third question, what is the totality of management fees paid since 2002? I'm not going to add up that. I mean, it's public knowledge. It's just it's a meaningful number, unless you want to say you got to combine that with how much money have you made. But I do think that that's publicly available. Our performance is always after fees, by the way. It's after everything has been paid off. So those are the mailed-in questions. Now, are there any questions from the floor? Stick your hand up if there is, because we'll get a microphone to you. No questions? That's even better. Well, you can get to the...
Uncle Harry only drinks Diet Coke.
Right?
He's not an alcoholic.
Okay. I didn't know you were an uncle. Yeah, you are.
You referred to Uncle Harry.
Well, I was using the generic, So what we're going to do now is why don't I turn it over to 2 of our investee companies that are we're so proud to be involved in these companies. So who would like to go first? Marianne, do you want to go first? Sure. Marianne Palangio is the Chief Financial Officer of the Canadian Securities Exchange. She's been with us many years and just an outstanding corporate officer. Richard Carlton, who usually does these, is swanning off someplace, probably Australia.
No, he's in Montreal. Not so fun.
Oh, that's no fun. Thank you. I'll leave it to you. Oh, you, please.
Thank you. Thanks very much, Tom. And thanks for having us. I'm very excited to be here. And, just to echo some of what Tom said in terms of Urbana, we're delighted to be here because Urbana very much is a value creator and a huge supporter and partner of the CSE, and really has been the main reason why we are where we are today from when they originally came in and made the investment. So thank you for that. There, that worked. So quick update, since Richard was here last year at the AGM, the exchange celebrated 20 years as being recognized as a stock exchange. That was last year in 2024, and we really treated that as the historic milestone that it was. We had events across the country really thanking our investors, our issuers who have supported the exchange in terms of trusting us with their listings over the years, and really did have great brand recognition that tied to our new website, our new brand across the country. So that was really great. Urbana celebrated 10 years, listed on the CSE, and we had a great celebration opening the market on February 5th, 2025, with many of the officers and directors here that joined us, so we greatly appreciate that. And also, Urbana was, of course, our very first non-venture senior listing on the exchange after we got approval from the regulators to have both venture and non-venture, and we are the only listing exchange in Canada that has both tiers on our exchange, and Urbana was our first, so thank you for that too. The big news, CSE is to acquire the National Stock Exchange of Australia. That was announced on May 18th, 2025. Lots of work went into it before that. It's obviously subject to various approvals, court, regulatory, shareholder approvals, both in Australia and here in Canada. But it really is looking at an exchange that is very much similar to the CSE in terms of culture and focus, and very much at the stage we were back when Urbana came and saw the potential of us. And again, to Tom's point, it's not just the numbers, it's the management team. So we've looked at NSX over the years, but really this was the perfect time of the right management team in place, the right amount of displeasure with the Australian Stock Exchange, to be honest. So a great opportunity to be a true competitor in Australia, the only true competitor in Australia to the Australian Stock Exchange. So we're really looking to build on the success that CSE has had in building ourselves from where we were, again, when Urbana came and supported us to where we are now. Interactive brokers. So all CSE listed securities are now eligible for trading on the Interactive Brokers global platform, and that may not sound like big news, but it is. It's been a long time in the making. They have 3.6 million client accounts globally. They have a lot of daily trading. It's a major development for our issuers and their investors in terms of getting more access, more liquidity globally. There's been demand for that. There's been demand for global investors into Canadian companies on our exchange. So it really is helpful to all of them for increasing liquidity, enhancing price discovery, and supporting capital formation for our companies. And there's some current stats on the side that I just won't refer to. They're there. In terms of specifics for our main revenue line items, listings and trading, Tom spoke a little bit about the new government in Canada, and certainly cancellation of the capital gains tax increase has been a benefit that we'll see, particularly for supporting more investor confidence in Canadian companies. That was something that there was great displeasure with in terms of the small cap space when it was originally announced, so canceling that has been very helpful. And the mining sector. So onshoring, nearshoring of assets, key to the sustainable economy, is a major contributor to the funding of the valuations of companies. And again, for Canada, that's the battery metals, that's the rare earths, that's uranium. Those are all the things that we're looking at in many of the companies looking to list on us in the junior mining space. So, and record gold prices are certainly favorable for those companies. Market on Close is a facility that we're looking at putting in place shortly. It's really striking a price to support the participation of our listings in ETFs. So that's going to enable ETF manufacturers to create and list products on the exchange appropriate for the CSE, such as junior mining. So we're looking to see how best to optimize that as well. Extended trading hours. Current theme in the exchange world across the globe, and CSE is certainly looking at regulatory and workflow implications of that. We've had a few dealers ask us about extended hours, and certainly we've got the benefit of knowing the folks over at Blue Ocean who've got lots of experience there, so we'll certainly be looking to leverage that. Quick summary that we normally show in terms of capital formation on the CSE over the last few years. Lots in 2021. That was the COVID joy years of lots of trading activity, lots of capital raising. Bit of a decrease over the years. Last year looked better, and in particular, as you can see, the highlighted line in mining, and we're continuing to see that in 2025 year to date. In terms of the CSE business outlook, we're leading the competition with 15 new companies listing on the exchange to the end of May. So that is more than any one of our 3 other competitors who do listings. So that's 44% of the market share. So we're pretty excited about that, despite the challenging conditions. So lots of challenges in terms of companies raising money. As we've already talked about, uncertainty from the U.S. administration. We don't know what we're going to see every morning when we get up, the tariffs, the trade disputes. So despite that, we're hoping, again, with the new government in Ottawa to see improved prospects for the mining industry. In terms of trading, we did see increased volumes right after the U.S. election, but that certainly softened after the inauguration. But we're seeing a bump in activity now with, particularly on our exchange, gold and crypto, really leading the charge on that. Our overall market share has increased slightly, which is also nice to see. And part of that has been we've added the ability to trade CBOE Canada securities to our trading services. Data continues to be a strong earner, very consistent. We've had some nice increases from that over the years as we've changed our pricing and our contracts to be more consistent with our competitors. And we have 2025 projected to be the highest annual data revenue year ever. And we're looking at additional opportunities within our current client base. And of course, NSX, in terms of the business outlook, we're really looking forward to getting that transaction closed, getting the approvals, and bringing some benefit both to Australian investors who want to invest in Canadian stocks in the CSE and vice versa, and really bring some benefit to our shareholders overall as well. And then you'll see the picture of them ringing the bell for Urbana 10 years listed on the exchange to the left, to the right. And that's what I have. Thank you. If there's any questions, I will be around. Or I can take questions now. I'm not sure how the...
Any questions now? Or?
Oh, no, he can't ask a question.
No,
it's Ian.
The acquisition in Australia, is that all cash, or are we issuing any shares?
At the moment, it's all cash. And so anything afterwards will be subject to, further discussions afterwards. But right now, it's all cash. Thank you.
Thank you, Mary.
I will leave the clicker up there for Didier. I am good. Thank you.
Well, thank you very much, Marianne. Two things I forgot, which I please accept my apology. First was my cell phone announcements, which I'll make next year when we start the meeting. Secondly, recognize Ian Bandine, who was one of the founders of the Canadian Securities Exchange. So I want to recognize you and thank you for your being here as well. Next, we have Didier Lavallée at Tetra Trust, which is a custodian for crypto assets. It's a really exciting company. Come on up.
Good morning. Thanks a lot for having me. I'll also echo what Marianne said. The Urbana folks have been fantastic with support over the last few years. Really helped us grow our company, clean up our cap table. We'll talk about that as well, but it's been a fantastic partnership, so thanks for having us. So I'll speak a little bit about Tetra. So Tetra, and a note from Brendan as my last presentation, is a digital asset custodian. So really what does that mean is we protect crypto for businesses. We're a B2B business, so institutions, regulated crypto trading platforms, ETF providers, high net worth individuals, family offices, et cetera, et cetera. The company was founded in 2019 and is registered under the Loan and Trust Corporation Act of Alberta. So we're a fully regulated trust company, provincial trust company. We also meet the definitions of qualified custodian under the Canadian Securities Acts, which means that we can essentially provide qualified services for our clients. The genesis of the company actually comes from a lot of malfeasance in the digital asset space, which unfortunately has continued over the last couple of years. But really, the inception was an event of Quadriga CX, which in 2019, one of the largest crypto trading platforms in Canada, the founder essentially left with all the assets. There's a Netflix documentary for those that have interests in the situation, but essentially took over 200 million of client assets with them when they left. And then, more recently in 2022, you can talk about the FTX case as well, because it's relevant to what Tetra does. And what I mean by that is, you have a founder who, might employ certain practices, but at the end of the day lacks governance, lacks asset control, and essentially is able to do what he wants with what's on the platform. So the point of qualified custody is essentially to have a third party secure the assets, but also properly govern, the retail assets that are sitting on platforms. Why does this matter? And these charts, I will apologize, are a little bit outdated, but essentially, you've had a tremendous appetite for digital assets, specifically Bitcoin. Some of it is Trump related, so it is benefiting our ecosystem. But also, to Mr. Caldwell comment around inflation, around, the lack of visibility around global trade, uncertainty, et cetera. Bitcoin has really emerged as a store of wealth, a digital store of wealth, I would say. What you saw in 2022 was 2024, was a transformative year with ETF approvals in the U.S. So, you had a total of 41 ETF launched in the U.S. And, I will point out that Canada was a leader and still is in ETF vehicles, because we've had providers that have had ETF into public market, like Evolve for crypto since 2021. And then already at the beginning of this year, you've had 27 other launches. You've had new products come to market like Solana, which we custody, one of the largest, actually, Solana ETFs into the public market that have come. So lots of momentum in the overall space, lots of regulated product coming into the marketplace for essentially investors. You're also seeing a lot of news on the space. So first of all, JP Morgan, Jamie Dimon, a well-known Bitcoin non-believer, essentially said that he's going to allow his clients to invest, but also he's going to collateralize the Bitcoin. JP Morgan. For those that followed Circle, IPO'd last week, $31 a share. Yesterday was trading at 105. So huge success, essentially, on a stablecoin issuer of USDC. Lots of traditional finance bridging over to crypto. Big banks are exploring, essentially digital asset infrastructure. Lots of acquisitions that are merging the two worlds. So a lot of crypto native companies are, buying non-crypto related assets. So like Ripple, which is an issuer of a token, buying Hidden Road, and vice versa as well. We're seeing a lot of traditional finance players buying crypto. Lots of regulatory changes as well. So the CSA essentially approved USDC, which is a US dollar stable coin, to be in circulation in Canada last year. You've had MiCA, which is a European regulatory regime that was put into place at the end of last year. The SEC, under new leadership, is forming a crypto trading task force. They're doing a lot of roundtables with the industry. You expect a lot of changes coming there. Actually, I was reading this morning that the Clarity Act is going through Congress and has received approval, where the oversight of crypto would move from the SEC to CFTC in the US. So there's changes around regulations happening. The CSA is publishing a lot of rules as well on our side, and then the Genius Act in the US, which is the stablecoin framework, that's also is moving forward to some degree, but it's very political, and everybody wants their pound of flesh. There's a lot, I've been in this space, and for background purposes, my beginning of my career was in capital markets, equities. I did foreign exchange as well, led trading teams, led global execution, and then was in asset servicing. The original thesis in crypto is that, it's funny money, it doesn't work, there's no use cases. The reason why we're putting this use case is because it does work and the use cases are very real. So what do I mean by that? There's more volume on stable coins than on Visa, MasterCard, PayPal altogether, right? So the use cases for transactional dollars, remittances, cross-border is actually blowing up and has been, and with a lot more clarity. There's a lot more product coming to market. A lot of non-believers would always say, well, it's expensive to transact on the blockchain, so why would you do that? Well, with some of the technological advancement, essentially the cost of transactions are now sub a penny, which means that you can send money anywhere in the world for less than a penny. So that is very attractive to a lot of businesses. And there's a lot of treasury management functions that are starting to employ stablecoins to manage treasury. I can share transparently that we don't pay any international counterparty with dollars anymore. Everything's on chain. It's more efficient, it's cheaper, and we don't have to deal with any of the restrictions that might come with trying to transact as a digital asset company. So the use cases are here. The other thing that's not on this chart that I will point out is treasury Bitcoin allocation. This is a huge trend that we are seeing. A lot of companies are essentially coming forward and wanting to make allocations to crypto. That growth, that momentum is good for Tetra. So, we've had 400% plus CAGR, in the last 3 years. We transact an enormous amount of volume, so 15.6 billion since inception. Last year, 100% growth on the client side, on the revenue side. And then something that we're very excited about, in May, we announced essentially a partnership with Wealthsimple, which means that Wealthsimple will start custodying assets with Tetra as its first Canadian custodian. Right now, the assets are with U.S. players, and they see it important to bring those assets back. They're choosing Tetra to be, their partner of choice in Canada, and we're very excited about the opportunity. Really kind of opens up the, more Canadian players to our services. We've built a team of highly qualified executive with a lot of experience across essentially traditional markets, consultancy, SaaS as well, and software. So very excited about the team that we've assembled over the last few years. Great momentum and great partners to have in building this business. Fantastic shareholder base, obviously. So Urbana now, a majority shareholder of Tetra. We also have the CSC as shareholders. We have Coinbase Ventures. Horizon Kinetics has also been coming in the last few years, and some family offices as well. I would say as somebody that's 3.5 years as the CEO of a private company, can't emphasize enough the partnership with your shareholders and the importance of that. So, a lot of good things to say about our shareholders and the support they've provided us. And then, as I have 1.5 minutes left, Tetra today is doing qualified custody for institutions, but we're actually very excited about new lines of products that we're launching, one being a software product. So over the last few years, we've developed essentially an in-house platform to manage all the different digital asset role that we have to play as a custodian. So the governance role, the oversight role, the reconciliation at the end of the day and of the month for our clients and ourselves as a regulated financial institution. And we believe there's a market for our product out there. By talking to our clients, by talking to some of the industry participants, there's a lack of institutional grade tools available in digital assets. You'd be surprised that we had a comment yesterday that there's a lot of these crypto trading platforms in Canada that are running still on Excel. And that's the reality of the marketplace right now. So we think we have a huge opportunity on our software stack. It's something we've released formally on May 13th. We already have a strong pipeline of opportunity. It's efficient, it's automated, it's fully audited, from a SOC 2 Type 2 perspective. And we see a lot of appetite for that in the marketplace. So I would say more things to come for Tetra. Our ideal scenarios, we have multiple lines of revenue that, essentially helps us hedge out some of the asset price volatility. That's, our bread and butter right now. And we're quite excited about what's ahead. And that's it. Thank you for your time, and I'm happy to take any questions. Yep.
The recent acquisition by Robinhood of WonderFi, obviously you guys have a pre-existing relationship with them. I'm curious to know what that means for your business. Is it something that you'd welcome in a player like Robinhood eventually, or a player like, say, Wedbush, where they're involved in Bitcoin futures, or that's something that you see Tetra venturing into later on?
Yeah, so a couple of things. First of all, I would probably say that while we're not in the crypto trading platform business, more competition is probably better for the Canadian marketplace. I do think it's somewhat unfortunate that a high-ish quality asset in Canada goes to American hands, but that's unfortunately some of the reality. It's very good for Tetra, and I'll say why. Why I had that point of view is it actually has forced some Canadian centricity to some of the existing players. A lot of Canadian platforms have been put on notice that there's a huge player with a lot of capital that's been very successful, a lot of markets coming in. They're going to be very aggressive, and that's rethinking a lot of the business model, and it's pushing a lot of business in their direction. So as an entity that's servicing crypto trading platforms and transactional platforms, we've actually benefited a lot from that deal being announced. I think it's public knowledge now, but obviously, we took off the majority of the WonderFi on our cap table, and Urbana stepped in as a shareholder. So it's been fantastic for Urbana shareholders as well to have this opportunity, because through that cleanup, now we're benefiting from the market dynamics coming in our way. Any other questions? No? Thank you. Thanks for having me.
Well, thank you, Didier, and thank you, Marianne. Really appreciate that. We always like to give some color to the companies that we're investing, because it feeds back into how we think. We think out of the box. Crypto, et cetera, or capital markets, we're behind in the network that make these things work. And I liken us a little bit to Thomson Corporation, where they're behind the news services. They're the feeders that make it work. So it's going to be an exciting time for both of these companies coming up. The Australian one is going to be very interesting for the CSE. Thank you all for coming. We're going to be here. You can talk to any one of us if you want to for a while, and hope you have a good afternoon, and thank you for joining us. Bye-bye.